So if we start off with the referendum, obviously last week we voted to leave the EU, and as a result of that we may have expected to see some price volatility on UK gas and power. As it turns out, there wasn't all that much and prices stayed relatively flat. The main reason for that was that in the weeks leading up to the referendum we saw a risk premium being built into seasonal prices on the anticipation that we may leave. The fact that we did vote to leave meant that that risk premium held. We were more likely to see volatility if we'd voted to remain, where we could have seen a sell-off and prices kind of drop as a result of us voting to remain. Markets that were significantly affected were financial and equities. If we look at currencies, we saw the pound really struggle on Friday and dropped quite significantly, but the euro also did, and that's mitigated some of the impact to UK gas and power prices, as because we're obviously importing and exporting to Europe, and if the euro diminished at similar levels to the pound, that's obviously mitigated the impact to us directly. One currency that did really well out of Brexit was the dollar, and that moved to multi-month highs, and that's had an impact on oil prices, with oil falling from around $50 a barrel to 48, and that obviously has potential to have a knock-on effect on our own gas seasons, potentially seeing them move lower. If we move back to fundamentals, if we start off with gas, there was obviously an announcement by Centrica about Rough storage last week. Basically, we've seen Rough now go offline for around 40 days, not due back till August, and that's basically going to potentially see two main changes in the outlook going forward. Look at the summer months, we're potentially going to see much less injection demand, which means we could see prices over the short term outturn cheaper. However, it does increase risk on the winter season, given the fact we'll probably go into the winter with record low storage levels. If we get relatively high demand during winter, we could really struggle and the system could be really tight and subsequently push prices higher. In terms of power, we've seen changes to the nuclear schedule, so we were expecting Dungeon SB21 to come back over the weekend, and that's been delayed and is due back later this week. On top of that, there's been another nuclear outage that's been planned and we're expected to come offline. But further to that, there's been another unplanned outage, which means we're currently looking at around 2 gigawatts of capacity offline. And that's obviously increased system tightness on the power market. So as a result of the referendum, we were potentially expecting some volatile price action on gas and power. But as a result of the leave vote, the risk premium that had been built in over previous weeks held, and we didn't actually see all that much volatile price action. So prices ended the week relatively neutrally, and we've opened this week at around the same level. Going forward, there is potential for prices to continue moving up. In terms of technical analysis, we've seen an uptrend develop in both gas and power prices, and they could sustain on the upward trend going forward. In terms of contracts close to delivery, particularly day-ahead gas, we're expecting potentially prices to move lower over the short term as a result of the outage at Rough. We're not going to see any storage injections over at least 40 days, so up until early August, and that's potentially going to see increased gas sat in the system, unable to go anywhere, and that could potentially suppress gas prices going forward. So as a result of the UK referendum and the outage at Rough, we're basically looking at a very uncertain picture going forward. In terms of gas prices, we're at 9-month highs. In terms of power, 12-month highs, and the indication is going forward that these prices could continue to rise. So those customers on fixed price contracts, I'd recommend you entering the market ASAP. This week might represent an opportunity in terms of prices moved up quite a lot last week. We could expect a bit of a pullback this week, which would give you the opportunity to secure a slightly lower price. Customers with flexible contracts, it's down to your current hedge levels. If you're carrying a relatively low hedge, I'd recommend you that you increase that to mitigate some of the risk going forward. However, if you've got quite a high hedge already, this week might not necessarily represent an opportunity for you to increase those hedges. Again, we don't know what the fundamental outlook is going to be at delivery. There are expectations that we're going to see much more US LNG, and we could potentially therefore see prices outturn cheaper at delivery, but that's by no means assured. So at the moment I would err on the side of caution and carry a much heavier hedge into the winter season.